program, one that is another session on returning to repayment. Those are recorded and will be posted. And then earlier this week, we did a session on your types of student loans. But we're so excited to have you here today. And it looks like we may be at critical mass here. So again, thank you so much for joining us. My name is Kira Taylor, and I am a student loan attorney at the National Consumer Law Center. And I'm joined by my colleague, Anna Anderson, who's also an attorney at the National Consumer Law Center. And we're here to talk to you today about returning to repayment on your federal student loans. So today, it's a really exciting time to have federal student loans. So we're going to talk about the end of the payment pause. We're going to talk about what returning to repayment means. We're going to go through a checklist of what you need to do to prepare for repayment restarting. And we're going to go through each step so you know exactly what steps you should be taking. We're going to be focusing on federal student loans today, and that's because if you joined us yesterday, you learned that the vast majority of student loans are federal student loans. If you're confused about the types of federal student loans you have, we did a session on that yesterday that will be recorded and posted. However, the other important thing to know about federal versus private loans is that the relief and options that we're going to discuss today only apply to federal loans, not private loans. Private loans operate differently than federal loans. So as of September 1st, the payment pause is over. Interest began accruing on September 1st, and bills are going to be sent out during the month of September. We've been told at least 3 weeks in advance of when your bill is due, and the bills are going to come due in October. So now is a great time to buckle down and prepare and figure out how you're going to repay on your federal student loans. So again, payment pause is over. It was happening for 3 years. Those loans are still outstanding. The student loan interest is being added to your student loans again as of September 1st. And if your payments were paused during the pandemic, you're going to receive your first bill. You may have already received it, or you may be receiving it soon. And again, the first bill is going to be due in October, and the due date is going to vary. So don't worry if you haven't gotten that bill yet, it's still coming. All right, so now returning to repayment, that's sort of the landscape where we are right now within federal student loans. So we're going to walk through what you need to do to make sure you're in good shape when those bills come due. And we're going to walk through a number of steps together. So the first thing is you need to check your student loan information on studentaid.gov. We talked about this yesterday, and there will be a recording posted. You're going to update your contact information with your student loan servicer on studentaid.gov. And with your student loan servicer and studentaid.gov, they have two separate websites. You're also going to see if you are eligible to have your loans canceled or forgiven, because there are special cancellation and forgiveness options for federal student loans. You're also going to see if you can use the temporary Fresh Start program to remove any loans that were in default before the payment pause from default. It's a really exciting opportunity. We're also going to talk about how you can choose a payment plan that's right for you, especially something like the income-driven repayment plan. You might have heard President Biden talking about the new SAVE plan. We're going to walk through both what the income-driven repayment plans are and the advantages and eligibility for the SAVE plan. Some folks with certain types of loans might need to consolidate those loans into a new federal loan. So we're going to talk about when you should think about consolidating. It's important that you consolidate before December 31st of this year. And so we're going to talk through that a little bit more. And then we're going to talk about scams. There are a lot of scammers afoot that are trying to take advantage of folks' confusion. And then last but not least, these things get really complicated and you may need additional help. So we'll help you figure out where you can get that help from as well. And again, we talked about this yesterday, but it is so important to know your federal loan types, your loan status, who holds your loan, because you can still have a federal loan that is held by a private entity, and who your loan servicer is. Some borrowers have multiple federal student loan servicers that they're interacting with about their federal loans. We covered this all yesterday, and if you missed it, that's okay. There's going to be a recording posted. All right, Anna, I'm turning it over to you.
Great. So we're going to get us started off on the second bullet of our checklist, which is updating your contact information with your loan servicers and on studentaid.gov. So as Kira said, you might have multiple loan servicers. So you really need to know who your loan servicers are. And if you don't have an online account set up with your loan servicers, make sure that you go and do that now. If your loan servicer changed during the pandemic, you want to make sure that you're aware of that and that you give them your correct and updated contact information so you don't miss any important notices from them. So we're going to walk you through how to update your contact information on studentaid.gov. So when you log on to studentaid.gov, which again, we went through yesterday, you can click on to this page here, which we have showing. There's a link right under your name where your profile is that says settings. So you want to click on settings. And from there, you will go to the next page, which is this page here. And you can click on contact information, which is on the left-hand side. And from there, you can just make sure that your information is correct. So that'll take you to another page. You can see if your information is correct, and then you can make adjustments and changes there. Now, again, as Kira said, it's really important to update your contact information. And so on the next slide we have is just why that is so important. So contact information is really key in terms of making sure that you don't miss any important information from the Department of Education about your student loans or your loan servicers. And next slide, Kira. So we have heard from a lot of folks that they just really don't understand who their loan servicer is and what is going on. So this is why going on to studentaid.gov, not only will you find out who all your loan servicers are, but you can make sure that the Department of Education has your most up-to-date contact information. We've been getting a ton of emails as student loan borrowers ourselves from the Department of Education reminding us to make sure that we're ready for repayment and that we know what's happening. So getting that information there and up to date will ensure that you don't miss out on any important notices because, again, the first bills are coming out sometime in September. So you'll want to make sure if you got an email address and you want those sent by email that you get that all signed up and correct. So we've done our contact information. Now we're going to turn it back over to Kira, who's going to talk to you a little bit about seeing if you can have your loans canceled or forgiven right now.
Thanks, Anna. So there are a number of rights that you have as a federal student loan borrower that don't exist for private student loans. And even outside of President Biden's one-time cancellation plan, which was struck by the Supreme Court, there are a number of other programs that still survive that you might be eligible for. And so we're going to walk through them very briefly today. And then we have a website, studentloanborrowerassistance.org, that has a lot more information about all of these cancellation plans. So you might be able to get your loans canceled now if you worked in public service for 10 years or are working in public service and are looking at 10 years. Public service includes teachers, government, and nonprofit workers. And you have to work in public service while your loans were outstanding. So that has to be at the same time. In addition, you need to have direct loans. You can consolidate non-direct loans into direct loans, but that is another requirement here. This is called public service loan forgiveness. In addition, you might be able to get your loans canceled if you can't work because of a physical or mental condition or a disability. This is called a total and permanent disability discharge. Some of these discharges are being processed automatically. However, there is an easy doctor form that you can take to your doctor to fill out to say that you have a total and permanent disability. You can submit it to the Department of Education and your outstanding debt can be discharged. In addition, there is a discharge if you didn't complete your degree because your school closed. That's called a closed school discharge. And again, we've got more information about this on our website. In addition, if your school lied to you to get you to enroll or take out loans, you can submit for a borrower defense discharge. And if you've been paying on your loans for 20 or 25 years, you may be eligible for cancellation via the income-driven repayment plans that we're about to discuss in just a little bit. So there are a number of different options here to cancel your student loan debt. And then in addition, if your school falsely certified your eligibility to take out federal loans, you may be eligible for a false certification discharge. This most often comes up with folks who didn't have a GED or high school diploma when they took out their federal student loans. Now, again, I just ran through a whole bunch of information. There's a lot more to learn and to share with you. And so if any of those sort of piqued your ear, you should definitely check out these two websites. So our website is studentloanborrowerassistance.org, and it has information about each of these cancellation programs. And in addition, there's studentaid.gov. And I also saw a question earlier that studentaid.gov, it can be a little finicky. So if you can't get on that first time, don't give up, try again. But both of them have a wealth of information. All right, Anna, next up, what should folks in default do right now?
Yeah, so if you have student loans in default, which again, we talked about yesterday about how you can figure this out on studentaid.gov if you are not sure currently of what your loan status is, it'll be really prominent. It'll be in bold, red, anywhere you look on your student loans on your studentaid.gov account, it will show that you are in default. If you have loans in default, well, the good news is that there is a great program right now called Fresh Start, which will help get your student loans out of default quickly and easily. And so the way that the Fresh Start program works is that if you want to get your loans out of default, not using sort of the standard ways that you can in normal times to get them out of default, you can just ask. You can ask the Department of Education to remove your loans from default for a limited time. This Fresh Start program only runs through the end of October 2024. So you want to make sure that you take advantage of this now. And it's really easy. All you have to do is call the 1-800 number we have listed here and spend about 10 minutes on the phone with the default resolution group, basically asking them to remove your loans from default, to get a fresh start. And that process will be quick, easy, simple. You won't have to go through any additional steps. You will be able to sign up for an income-driven repayment plan while you are on the phone with the default resolution group at that point, if that's something that you're interested in. So you could sort of kill two birds with one stone, so to speak, in terms of getting all of that done quickly and easily, and to make sure that you don't default again in the future. If you don't want to call, you can also visit online myeddebt.ed.gov to get the Fresh Start process started there. Again, it's a quick and simple process, doesn't cost anything. You should be able to get your loans out of default and back into repayment.
Bear with me for technical difficulties. There we go. All right.
And
I went to the website.
Yeah, you got a little preview, so that works great.
And then once you bring your loans out of default, the next step is, or for anybody, honestly, is figuring out what repayment options are going to make the most sense for you. So we're going to talk about the income-driven repayment plans, which are plans that you would have to apply to enroll in as well. And we're going to talk about President Biden's new SAVE plan. So you might be asking yourself, oh my gosh, I'm not going to be able to afford this payment that's coming. What am I going to do? And you do have options. So first thing is you can contact your loan servicer for an estimate of what your bill is going to be. And if the amount's too high, you should consider enrolling in an income-driven repayment plan. Again, it's not automatic. You have to apply for these plans. In an IDR plan, your bill is based on a percentage of your income, not your loan balance. And so that is what reduces those payments significantly for many low and middle income people. There are multiple plans available, and they vary based on your loan type, loan disbursement date, and what you borrowed your loans for. After 20 or 25 years of repayment, your loans are canceled, which is huge. So not only does it reduce your monthly payments, but it will also cancel your outstanding debt. Now, one big note here is that Parent Plus loans are not eligible for an income-driven repayment plan unless they're consolidated into a direct consolidation loan. Any direct consolidation loan that contains a Parent Plus loan is only eligible for the income contingent repayment plan, which is the least generous income-driven repayment plan. We want to make sure you understand this, because if you have loans for your own education, it might make more sense to only consolidate that Parent Plus loan, because you can be enrolled in 2 different income-driven repayment plans at once, and your own loans may be eligible for a better income-driven repayment plan. There are multiple types of plans as well, but we're not going to be able to talk about all of them today. We have information about each of the plans on our website, studentloanborrowerassistance.org. But there's a really exciting one that we did want to make sure we talked about with you. So Anna, tell us about the SAVE plan.
So the SAVE plan, why it's so exciting is, well, it's a new plan. This was announced just this summer, and under the SAVE plan, more and more people are actually going to benefit from a $0 a month payment. So it sounds like it doesn't make any sense that you can have a $0 a month payment, but that actually is the case in IDR. Depending on what your income is and your household size is, you may qualify for a payment that is as low as $0 a month, and it still will count towards IDR loan cancellation and also be considered a payment in good standing, so you won't go into default with that $0 payment. So with the new SAVE plan, again, more people are going to have much lower monthly payments. It will also shorten the number of years that some borrowers will need to make payments in order to qualify for loan cancellation. So with income-driven repayment plans, depending on how long, as Kira said previously, you make payments on it, you can get your loans canceled after a certain number of years. And with the SAVE plan, that's going to be much shorter for some borrowers. So another benefit of the SAVE plan is that you won't actually see your balance increase while you're making payments. And that is because interest that is not covered by your monthly payment is canceled and waived by the Department of Education under this new plan. So that's a big deal because a lot of people, when they're making payments on an IDR plan, one of the things that they don't like is they don't like that they're not paying down the interest and they're going to see their balances growing. That will not happen with the SAVE plan. So we're very excited about that. Also, if you are married, your spousal income will not count if you file your taxes separately from your spouse, which again, for certain borrowers, if you're married and your income levels are different, that can be very tricky in terms of, getting a payment plan that's right for you. But with this payment plan, that may make it so that you still qualify for a lower payment. Another big benefit, again, as we mentioned before, is that more low-income borrowers will be eligible for a $0 a month payment. Now, we've sort of noted here in asterisks what things are being implemented now versus being implemented later in the summer of 2024. So just be aware of that could be something where you might not see these benefits right away, but they are going to go into effect in July 2024. Now, another big note for the SAVE plan is that only direct loans are eligible. So again, Parent Plus loans, even if they are consolidated into a direct consolidation loan, they're still not going to be eligible for the SAVE plan. They're still only going to be eligible for the income contingent repayment plan, the ICR plan. So again, as Kira mentioned, if you are trying to get into IDR, you may still want to consolidate your Parent Plus loans separately so that all of your other direct loans can be eligible for this SAVE plan. And you can be on 2 repayment plans at the same time if you have multiple loans. It's very confusing, but you want to sort of maximize your benefits here and maximize your savings. So those are just some things to consider with the SAVE plan. And on the next slide, we have actually an example from the Department of Education about what the SAVE plan is going to look like for this borrower with $38,000 in annual income, a loan balance of $25,000, and an interest rate on a direct loan of 5%. So under the old plan, the repay plan, this borrower was paying $134 a month. But under the new SAVE plan that's being implemented, that is going to go down to $43 a month. So that's a savings of almost $100 a month, which right now is a big deal for borrowers. So this is something that we want to make sure that folks are aware of because there are real dollars that you can put back into your accounts under this new plan. And again, the SAVE plan may not be right for everyone. So if you are not sure what plan is best for you based on your income, your household size, how you file your taxes with your spouse, you can use the Department of Education's loan simulator tool to help you choose a payment plan. So this is what the loan simulator tool looks like when you first log onto the page. We'll put the link in the chat so everyone has it. The link will also be available in the slides. When you go on there, you can basically log into your studentaid.gov account. It will pull all of your information, including your loan balance and your tax information if you connect that with the IRS. Very simple, straightforward process to do, and it will generate what your payments will be under each different payment plan. Now, if you have issues with it, you definitely want to make sure that you're just double checking that everything is correct there. But it is a really good tool to use to help choose the best payment plan that is right for you. And one final thing that we wanted to talk about. Oh, go ahead, Kira.
Well, so one thing before we move off of the income-driven repayment plans, I'm seeing we're getting some questions about folks who file jointly. And if you file your taxes jointly with your spouse, then both of your incomes are counted in calculating your monthly payment. And it's a percentage of your income above a certain threshold. However, if your spouse also has loans, those loans are pooled together. But I just wanted to make sure we answered that because we've gotten questions from a couple of folks. And again, we've got more information about all of this on studentaid.gov and on studentloanborrowerassistance.org.
Yeah, and it's not necessarily the worst thing if you file your taxes jointly. We're not saying you have to do it separately. You may still come out with a really good repayment plan, even if you file your taxes jointly and everything is considered together. Not everyone needs to pursue that way to sort of maximize their benefits, but some folks have, particularly where there's a big discrepancy in terms of earnings between spouses, and also if the other spouse doesn't have student loans, that can really make a big impact on where you want to maybe see if filing separately would work for you. But again, these are all things that the loan simulator tool will help you figure out and see if that is going to be an issue for you. So if you can't make your payment, we just want to make folks aware that right now, the Department of Education is sort of recognizing that returning to repayment may be tough. And they have implemented this on-ramp period where if you have loans that are held by the Department of Education and you miss payment during the first year of repayment, so through October 2024, you will not be placed in default, and most negative credit reporting consequences won't appear for you. So that is one good thing to know about. You may be able to take advantage of that. You also, if you don't have Department of Education held loans, if you have a loan that's held by a private entity, then you can use a forbearance or deferment to delay your payments and not go into default. The one thing we want to make sure that you're aware of, though, is that interest will still accrue on those loans during this on-ramp or forbearance period. So just remember that, your balance is going to continue to go up even if you're not making payments during that time.
All right. So like Anna shared, on Save, only direct loans are eligible. And like we talked about yesterday, you may have loan types that aren't direct loans. So we're going to talk about consolidation, particularly for federal family education loans, FFEL loans, HEAL loans, and Perkins loans, and why you need to do it before December 31st, 2023. So if you have these older types of loans, all of these are much older. HEAL loans stopped being issued in 1998, Perkins loans stopped being issued in 2018, and FFEL loans stopped being issued in 2010. You're going to find that they're not eligible for the most generous income-driven repayment plans. And in addition, if they're not held by the Department of Education, they won't be eligible towards the Department of Education's one-time payment count adjustment, which is automatic. That is a huge deal because it puts many people closer to income-driven repayment cancellation, even if they've never been enrolled in one of those plans. So you should consider consolidating these older loan types into a direct consolidation loan before December 31st, 2023. This is the date you really want to remember. That you need to do it before the end of the year so that you can maximize what prior time in repayment will count towards income-driven repayment cancellation via the Department of Education's one-time payment count adjustment. You're eligible for it even if you've never enrolled in an income-driven repayment plan, as long as you have department-held loans. You can consolidate your loans on studentaid.gov. Our two favorite websites today, studentloanborrowerassistance.org and studentaid.gov. And it's a relatively quick and painless process. Now, a note on consolidating federal student loans. When you consolidate a federal loan, it means that you're taking out a new federal student loan to pay off the existing loan. You can consolidate just one federal loan into a new consolidation loan. You can consolidate multiple federal student loans into a new consolidation loan. However, you have to be the person who is the borrower. You can't consolidate the loans of multiple people. A couple of additional details about this. The new loans principal will include the interest that accrued on the prior loans. So you won't be subject to new changes in interest. It will be, so the new loan will have a larger principal than you may have had under your prior loans. In addition, the new loans interest will be a weighted average of the consolidated loans. So you won't be subject to new changes in interest rates. It will just be an average of the prior interest rates that you had. And then for a small number of borrowers, consolidation might mean that the regulations that govern an application for borrower defense discharges, a form of statutory relief, would change. And so that's something to keep in mind. If you're looking at borrower defense, you might hesitate on consolidating, depending on your situation. Let's see. In addition, you can only consolidate a federal loan one time, and consolidation is one of the limited ways out of default. So after you consolidate, you must stay on top of your payments. You have to be very careful. In addition, you might think about not consolidating your loans all into one new consolidation loan. You might think about breaking it into two, so that you could preserve your ability to get out of default in the future. All right. And very important, like we talked about before, if you consolidate before December 31st of 2023, you won't lose qualifying time towards income-driven repayment or public service loan forgiveness cancellation on your loans because of this automatic one-time payment count adjustment. So if you're going to consolidate, you should really consider doing it before December 31st of this year.
All right, so we only have a few minutes left, but we're definitely going to just mention a few things. One, we want to make sure that people watch out for scams. There are a lot of companies out there that are trying to promise loan forgiveness, loan grants, or help with your student loans for a fee. There is no fee from loan servicers that can charge you. They cannot charge you at all to help you sort of evaluate your student loan options. So be wary of any company that says, for a fee, we will help you get this. We also just want to make sure that folks are aware that refinancing your federal student loans with a private loan, we've heard people saying, oh, I'm going to take out a private home equity loan to pay off my federal student loans because there's a lower interest rate. We've been hearing horror stories from folks who have done this thinking they're going to get a better interest rate, but then they find out that the interest rate is variable, and what started as a 3% interest rate went up to a 14 or 19% interest rate. If you refinance your federal loan into a private loan, you are going to lose all the protections and potentially future benefits that might come out, such as loan cancellation or debt relief. If you do that, you can't unwind that at that point. So please just be aware of that. That's our sort of last spiel to what to do and what to watch out for before we just want to very quickly highlight how you can find help.
So this is a lot of information, and you may receive misinformation from your student loan servicer, or you might find out that something went wrong with your student loans. You can file complaints with a number of different government offices. So the Department of Education has an ombudsman's office that you can file a complaint with. You can file a complaint with your state student loan ombudsman or advocate. You could also file a complaint with the Consumer Federal Protection Bureau, a Financial Protection Bureau, a federal agency that works on protecting consumers, or the Federal Trade Commission, which also protects consumers. In addition, you can contact your local legal aid organization to see if you qualify for free help. And if you don't qualify for free legal help, you might be able to hire a lawyer that works on student loan issues. And we have all of this information on our website, studentloanborrowerassistance.org. as well. So this is everything. And unfortunately, we are right at time.
Can I just flag a couple of things,
Sure.
Kara? So we had a lot of questions in the chat about specific IDR plans. We're going to talk more tomorrow about income-driven repayment and getting loan cancellation under those plans. So please join us for the webinar tomorrow. And I will also say that, again, a lot of these plans are discussed in more detail, and information about consolidating more detail on studentloanborrowerassistance.org. So if you have remaining questions, join us tomorrow for the webinar that dives a bit deeper into these topics, and then also check out our website.
Awesome. Thanks, Anna. And thank you so much for joining us today on this lunchtime chat. Again, this video will be posted, as will our other webinars as well. But we're so grateful that you joined us today.